Everybody, welcome to today's fundamentals. Hello, Peter.
Hello.
How have the markets been behaving?
Well, we saw the US dollar practically edging a little bit lower. Mind you that we're about to enter a rather critical period. We are about to get in the American session today the US CPI rates, so markets' attention has turned towards inflation. At this moment, it would be interesting to note that US Treasury Secretary Yellen had stated yesterday, or was reported stating, that she expects inflation to practically drop rapidly over the coming year. And she also stated that a recession may not be required for actually the inflation to slow down to normal levels. That was an interesting comment. I would be also noting that the Fed's two-day meeting begins today. The interest rate decision is to be released tomorrow. So overall, I would say that the market is slowly but steadily repositioning itself ahead of these two key events.
And what about US stock markets?
Well, US stock markets were on the rise. We had all three major indexes, the Dow Jones, S&P 500, NASDAQ, they all rose. There was also considerable merger and acquisition activity in the stock markets yesterday, Monday, which tended also to provide a boost for the market sentiment. And I would be also noting that the expectations for inflation are that it will be slowing down even further in November, which more or less tends to solidify the expectations of the market that the Fed's going to be easing on its rate hiking path. And thus the actual possibility of a recession may be just avoided, or the recession may be shallow.
And how about the oil prices?
Oil prices were on the rise. And it seems that on the fundamental level, the shutdown of the Keystone pipeline running from Canada to the US due to the oil spill in Kansas, and practically the uncertainty on when the pipeline is to reopen, in addition to uncertainty regarding Russian oil supplies, tends to create some uncertainty in the market about the supply side of oil. So there may be some tightening in the coming days over oil, which could push oil prices higher. For the time being, it's notable that WTI's price has broken the downward movement which characterized it over the past 10 days or so. And that was an interesting feature. Should oil prices rise further, we may see also other trading instruments getting some support, say for example the Canadian dollar, which is positively correlated with oil.
And what's on the calendar for today?
Well, we have a number of releases. We already had the final HICP rate from Germany. It was for November. It confirmed the slowdown of inflationary pressures in the largest economy of the Eurozone. I would also note UK's employment data. They were for October, and we had on the one hand a tick up of the unemployment rate as was expected. The surprise though would be on the employment change figure, which rose more than expected, got out of the negatives. It reached 27K, and that was a positive, which if combined with yesterday's better than expected GDP rates and manufacturing output rates, tend to improve the picture of the UK economy. Those were in the positives. Tomorrow we'll be getting the UK CPI rates, and overall I would note that pound traders are to have a very busy week up until the end of Friday. Other than that, right about now we are getting German SEF indicators. Now both are expected to improve, and if actually so, that would imply that there's less pessimism among investors and analysts about the outlook of the German economy. And at the same time, that would also imply that we get an improvement on the conditions on the ground. for the German economy, which is also positive for the euro. Other than that, I would note definitely in the American session, I would be highlighting the US CPI rates for November. The rates are expected to slow down both on a month-on-month as well as on a year-on-year level. And if actually so, should they even exceed market expectations, we may see the US dollar weakening, as practically the market is going to be expecting a less aggressive stance from the Fed in its interest rate decision tomorrow. Other than that, oil traders may turn their attention to AP's weekly crude oil inventories figure. Another substantial drawdown could once again imply that there is a tight US oil market, which could push oil prices higher. And we move to tomorrow's Asian session. I would be noting from Japan, definitely the machinery orders growth rate, as well as the Tangan indexes for Q4. Now, the Tangan indexes, the services sector is expected to improve, while the manufacturing sector is expected to drop. I would place my weight mostly on the manufacturing sector, given that the Japanese economy is industrialized. And I would be a little bit worried about the outlook of the Japanese economy.
And what's on the monetary front?
On the monetary front, we have BOE releasing its financial stability report. If I'm correct, BOE Governor Andrew Bailey will be speaking. Now, should the report show that there is some degree of uncertainty regarding the financial conditions in the UK, we may see the pound weakening somewhat. Later, actually during tomorrow's Asian session, RBA Governor Lowe is scheduled to speak, and we may see him hesitating somewhat given the interest rate decision of RBA 1 week ago, which may weaken the Aussie somewhat.
Any final comments?
Well, I think it's going to be interesting to see how the market will be positioning itself ahead of the release of the CPI rates. But should the release as such not exceed market expectations, there may be some volatility, but it may be lower than we expect. It may not be that extreme. On the flip side, should market expectations be exceeded by the actual rates, and should the rates drop more than expected, then we may see US stock markets rising substantially while the US dollar may drop.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Yosef.
Welcome to the technical analysis part of the presentation for today. My name is Peter Yosef, Senior Market Analyst at IronFX. In front of your screens, you have the US dollar index. It's the 4-hour chart. All charts to be presented are to be of the same time frame unless otherwise stated. For the time being, we see that the US dollar index maintains its sideways motion as was expected yesterday between the 105.55 resistance line and the 104.5 support line. Now both the first resistance support lines were tested. We can see that on the downside for the S1 here and on the upside here, but the R1 was also tested as a support line here and here. So they're both pretty valid, and I'm going to be keeping them. We tend to maintain our bias for the sideways motion to continue. Note how the Bollinger Bands have converged even more in the past 24 hours, showing that volatility is even less. At the same time, the RSI indicator is running along the reading of 50, implying a rather indecisive market. So we tend to maintain our bias for the sideways motion between the R1 and the S1 to continue. Now, we have a number of releases which may increase volatility. For example, the CPI rates, the US CPI rates for November, which are due out at the beginning of the American session today, could increase volatility substantially. For the time being, the rates are expected to slow down. And should they slow down more than expected, we may see the market being caught in a surprise and practically break the S1, 104.5, and start aiming for the 102.50. On the other hand, should by any chance, say for example, the US CPI rates accelerate, which is something which is out of the market's expectations, I would definitely expect to see the USD rising, clearly breaking the 105.55. Next stop could be the 107.15, which was tested here, 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 and here. And should the R2 be broken, we may see the price action rising all the way up to the R3 109.10. It's going to be an asymmetrical price reaction should the rates accelerate, because that's totally out of the market's expectations. We may see lower volatility should market expectations be realized, while should they exceed, so should the CPI rate slow down more than expected, we may see the downside risks for the USD rising. Let's have a look at Euro USD. Euro USD, which has remained also in sideways motion between the 1.0605 resistance line and the 1.046 the support line. We tend to maintain our bias for the sideways motion to continue, as was mentioned yesterday. Mind you that the RSI indicator, despite some efforts to place some distance between itself and the reading of 50, didn't work out, and the reading is actually back at 50. Right now it's at 53, if I'm correct. Yeah. Which tends to imply that the sideways motion may be continued as well. On the flip side, should the bulls take over, say in case that the US dollar weakens, we may see the Euro USD rising, breaking the 1.0605 and start aiming for the 1.0785. On the flip side, should the bears take over, in case, say, for example, the US dollar strengthens, we may see the pair dropping, breaking the 1.0460. Next possible stop is to be the 1.0295, which was tested here, here, aimed for, tested. So it's a pretty valid level. I would be keeping that as well. But once again, we may see an asymmetric drop of Euro USD should the US dollar strengthen substantially, which may pave the way even for the S3 1.01. Let's have a look at cable. Now this is cables for our chart. Cable which tends to maintain its sideways motion. And it's characteristic because both the Euro USD as well as GBP USD tend to remain USD driven. So practically the stability shown by the US dollar has forced low volatility upon these pairs as well. It's characteristic, especially over the past 12 hours, how low volatility is. There's practically little of any movement. So we tend to maintain our bias for the sideways motion to continue, a bias which seems to be reinforced as the price action of GBP USD is about to break the upward trend line which has been guiding it since the, let's have a look, 4th of November. So most probably we may see the price action remaining between the R1 1.2345 and the S1 1.2125, albeit once again I highlight the fact that over the past 12 to 16 hours the volatility for the pair has been very low. Nevertheless, should the bulls regain the momentum, we may see the price action rising, breaking the R1 1.2345 and start aiming for the 1.2660. On the other hand, should the bear spiral rise, we may see the pair dropping, clearly now putting some distance between the price action and the upward trend line, breaking also the 1.2125, that would be a prerequisite for a bearish outlook, and start aiming for the 1.19 support line, a level which was tested especially here. Moving on to USD/JPY. Safe haven currency pair USD/JPY has broken just above the 137.50, yet tends to remain rather stable for the time being. Nevertheless, let's switch that. Given that the price action has remained above the 137.50 over the past 12 hours, and let's go hunting for a new resistance line. I'm going to be ignoring this peak here for the time being. I'm going to go a little bit further back. I have a nice level here, but I would be preferring these peaks here. One peak, second peak, another one, another one, another one. Also tested to the downside here. Seems to be pretty valid. I'm keeping that. And that's the in red 144.85 resistance line. Let's make the corrections also on the labels. $133.90 being placed now as the S3. $135.80 being placed as the S2. $137.50 being placed as the S1, given that the price action has broken above it. First resistance line being placed at 139.65. Second resistance line being placed at 142.20. And the final resistance line being placed at 144.85. Locking everything in. Here it is. So we have a number of elements here. The first element is definitely the fact that the price action has broken the downward trend line, which was guiding it since, let's have a look, the 4th of November as well. So definitely the downward trend line has been broken. That's one. Now the question is where the price action is turning to. Is it moving? Is it about to move in a sideways motion? Or is it about to take a bullish outlook? Now there is a hint here. The hint is that since Friday, the 9th of September, there were consecutive higher movements forming as an upward trend line. But that's being put to the test here. Nevertheless, if I drill to the 1-hour chart, I think it becomes more obvious. You can see that it has consecutive higher truths and consecutive higher peaks. Now, for that to be realized, that means that the next peak has to be higher than this one. So it has to reach somewhere here. In any case, as long as the upward trend line remains, we tend to maintain our bias for a bullish outlook. There is a slight catch here. The 1-hour chart suggests that it's about to break it. It's even more intense. It was tested. So it's going to be interesting to see in the next 24 hours whether the pair will be able to actually break the upward trend line or not. Should the upward trend line be broken, let's readjust to the 4-hour chart, then that would be switching us towards a bias for sideways motion, probably with the price action remaining just above the 137.50 or even revolving around the S1. On the other hand, should the bears take over, we may see the price action dropping, breaking the 137.50 and start aiming for the 135.80. Once again, as long as the price action remains above the upward trend line, we maintain our bias for bullish outlook. But an issue of warning, it's about to be tested once again. On the other hand, I would be highlighting also the RSI indicator. It has risen, it's at relatively high levels, it's currently at 65, which tends to imply that there is a bullish sentiment in the market right now for the pair. Mind you that the pair stabilized after hitting the upper Bollinger Band, and the Bollinger Bands have started to widen, while the moving averages, the 100, the 50 moving average, and even more the 20 moving average in blue, tends to imply that the direction has changed and a slightly upward direction has started to be followed by the price action of USDJPY. Very, very interesting chart. It's going to be interesting whether the bulls will maintain control or will they practically surrender to a sideways motion. Okay, let's have a look at USDCHF. USDCHF, which in contrast to USDJPY remains pretty stable. If you remember yesterday, the price action was at the 0.93330 support line. It has placed some slight distance, but nothing much. The sideways motion, in my opinion, continues. Interestingly enough, the price action has broken the downward movement of the 10-day moving average. Also note how the RSI indicator has reached the reading of 50 once again, implying a sideways motion once also as well. So we tend to maintain our bias for the sideways motion to continue, probably just above the 0.9330 support line. For a bullish outlook, I would require the price action to rise and clearly break the 0.9450, a level which provided resistance here and here. And should that be the case, then practically the way is paved for 0.96 resistance level. Now, I know it seems to be, the R2 seems to be pretty far away, but I would be noting that we had similar bearish movements in the past, which were of high volatility. On the other hand, we can see here that there were bullish movements of the same size. So I wouldn't be considering it as too far. It could be a level which is high, but for USD CHF, should volatility be on the rise, it's quite achievable. On the other hand, should the best take over, in case, say, for example, that US dollar traders are being disappointed, especially from the CPI rates, then we may see the price action dropping, breaking the 0.9330, finally a level which provides support here and here, and start aiming for 0.9210. Okay, let's have a look at the Aussie. Commodity currency pair AUD-USD. Definitely respecting the 0.6795. You can see how it was tested once again yesterday. And maintaining a sideways motion just below it. The upward trend line has definitely been broken. So that's out of the question. For the time being, we tend to maintain a bias for a sideways motion, probably just below the 0.6795. 0.6795, which was tested here and here. Also, the RSI, excuse me. Also, the RSI indicator, which has reached the level of 50, actually has remained close to the reading of 50, tends to imply rather indecisive market and the possibility that the price action is to remain at the same or near the same levels. Should the bulls take over, I would require a clear breaking of the R1, 0.6795, and the price action to start aiming for 0.6915. Higher than that, we have also the 0.7040. On the flip side, should the best take over, I would expect the price action to drop, possibly drop even below the 0.6640. It's a wide one, but it's quite achievable for AUD-USD. Don't forget that the commodity currency pair is considered to be a risky asset, exactly due to its nature as a commodity currency, and may start aiming for 0.6545. Okay, let's have a look at USD CAD. USD CAD, which has been in a sideways motion as well, between the 1.3570 and the 1.3685. Now at this point, the pair shows increased volatility as it's been driven on the one hand by the US dollar. However, also the Canadian dollar may be affected by oil's prices. So that's something which we should not neglect as a possible factor. For the time being, though, we tend to maintain our bias for the sideways motion to continue, probably between the 1.3685 resistance line, a level which was tested also yesterday, right here, but also here, and here, and here, and here. While on the flip side, to the downside, we note as the low boundary, the 1.3570, a level which was tested here. So we tend to maintain our bias for the sideways motion to continue. Should the bulls take over, we may see the price action rising, breaking the R1, and start aiming for the R2, 1.3805. On the flip side, should the bears take over, we may see the price action dropping, breaking the 1.3570, and start aiming for the 1.3395. Mind you that the RSI indicator is at the reading of 50, once again implying a rather indecisive market, once again supporting the notion of a sideways movement of the pair. The Bollinger Bands seem to have converged and stabilized, also a sign of low volatility. Yet we have to note here that despite the 50 and the 100 moving average showing an upward motion still, I would be highlighting also the 20 moving average, which has stabilized and it's actually going a little bit lower. Once again, sideways motion expected for USD CAD. However, at this point, I would like to have a look at the movement of oil prices. Oil prices which have risen and have risen substantially. And definitely some corrections are in order here for WTI. And there are a number of corrections which have to be made. Would be lowering this resistance line, raising this one, raising the support line. Note the double drop here. It's like a W, which under normal circumstances should apply that practically the price action is going to be rising and may reach even the 77.58. But before we continue commenting, let's find new support lines. They seem to be valid, both of them. Drill out. Okay, we could set practically this resistance line a little bit higher. See this peak here? And the next one, I'll maintain the R2 and move it decisively higher as volatility has risen. Something like that. And that would be the 83.20. Let's correct the label as well. Now this has to be turned into support line. $73.90 actually could go even a little bit lower to get the touch here. And that would be the 73.60 support line. That should be colored in green. Done. The 70.30 remains. And as does the 66. What we're missing now is a higher limit for the R resistance lines, and I would be placing it somewhere here on this peak here. And that would be the 89 resistance level, but in red, please. That's it. Let's correct the labels, starting with the S3, which is now being placed at 66. Sorry, S3. And the S2 at 70.30, S1 at 73.60, R3 at 89, R2 at 83.20, and the R1 at, let's have a look, A 78. Seems good. So for the time being, the question is definitely the upward trend line has been broken. That's clear. So the downward trend line has been broken. That's clear. Hence, we have to switch our bias for a bearish movement. The question is what direction it will follow. Now, given that the R1, former R1, now S1, the 73.6 level has been broken to the upside, I'm more inclined to see the bulls reigning over WTI's price. Mind you that the commodities prices have stabilized after hitting the upper Bollinger Band. At this point, it would be also useful to note that the RSI indicator was not able to escape the magic of the reading of 50. It's currently at 54, which leans more on a sideways motion rather than a bullish sentiment. So, on the one hand, we have some bullish indications. On the other hand, though, we note that there is some indications that the commodities price may be stabilizing. Should the bulls reign over, we may see the price action rising, reaching 78, maybe even breaching it. Should, on the other hand, though, the bears regain control once again, we may see the price action dropping, breaking the 73.60, and start aiming for the 70.30. Moving back to the FX market and the last commodity currency pair, that would be the Kiwi. The Kiwi, which remained rather stable. Not much to worry here. The RSI indicator is running along the reading of 50. Actually, it's right now at 53. So that's another indication for the sideways motion to continue, as there is also a convergence of the Bollinger Bands implying low volatility, i.e. also another indication for sideways movement. Hence, we tend to maintain that bias, probably between the 0.6440 and the 0.63, actually nearer to the R1 rather than the S1, given the stabilization of the pair over the past 3 days. Should the bulls take over, we may see the price action rising, breaking the R1 0.6440 and start aiming for 0.6570. On the other hand, should the bears be in charge, we would require the pair to drop, break the S1. I would like to see a lower true than this one before I actually adopt a bearish outlook, and we may see the pair then dropping even lower, breaking the 0.6155, reaching or at least the 0.6155 support level. Let's have a look at gold. Gold, which didn't move much, maintained its sideways motion. I would be skipping this support line, has been broken too many times. Let's find a new support line. somewhere here. It's 1702. Let's work also the labels. Okay, I think now the picture is clear. We have gold's price, which tends to maintain its sideways motion between the 1766, which was tested here, and here to the upside, and the 1807, which was aimed for here, tested here. Note how the Bollinger Bands are converging and narrowing, also implying low volatility. At the same time, the reading of the RSI indicators at 50, implying more or less that the sideways motion is to continue. Nevertheless, should the bulls take over, say for example in the case that the US dollar weakens, we may see the price action of gold rising, breaking the 1807 resistance line, and start aiming for the 1840. While on the flip side, should the bears take over, we may see the price action dropping, breaking the 1766, and start aiming for the 1735. Let's have a look at US stock markets. Especially I would be interested in Dow Jones. Dow Jones, which is on the rise, interesting, but has not escaped our sideways motion. See that the R1 34,275 was also tested extensively here. I would like to see a break above it before I adopt a bullish outlook for the index. Now, should the bulls take over, we would expect the price action to rise, break the R1, and start aiming for the R2 35,500. On the flip side, should the bears take over, we may see the price action dropping, breaking the 33,470, and start aiming for the 32,670. I have to note here, and if you prefer, I would like to highlight the fact that the RSI indicator is pretty high. It's actually at the reading of 65, and that tends to highlight the bullish sentiment in the market. So there is the potential for the index to rise higher. But I would feel far more comfortable if I see the index actually break the R1 before adopting a bullish outlook. Let's have a look also at NASDAQ. We haven't moved that for a pretty long time. NASDAQ, which has risen and broken the R1. Okay, there are a number of adjustments which have to be made here. I'm going to be pushing the upper trend line, the R1 to the 11,785. And the S1 at 11,450. Definitely this has to be pushed higher at 12,020. Let's go hunting for a new resistance line. It's a little bit out of the norm, but I think that should do the trick. At 12,645. And there's one lower at the 10,440. That should be it. Yep. Okay, we're all over the chart right now. Let's set the labels as well. Let's reaffirm that. Yep. $120, 11,785. Now there are definitely some bullish tendencies which should not be neglected, but I would like to see a break above the R1 before actually adopting a bullish outlook. Once again, the RSI indicator has broken above the reading of 50. It's aiming right now at the reading of 70. It's currently at 65. Let's have a look. Sorry, it's currently at 59, but that's still rising. So I would expect the price action to break above the R1, and that's the moment when I adopt a bullish outlook. That should be about it. Once again, sideways motion expected for Nasdaq, as long as the price action respects the R1. Should the R1 be broken, say for example we have a rate lower than expected for the US CPI rates, then I wouldn't be surprised to see the index rallying, breaking the 11,785, reaching the 12,120 or even higher. That should be it. So from all of us here at IronFX, best wishes for solid trading.
Hello everyone, my name is Emily and welcome to another of our informative videos. In today's video, we'll look at market orders. So what is basically a market order? It's an instruction from a trader to a broker to execute a trade immediately at the best available price. When you place a market order, it means you want to buy or sell a financial asset at whatever the current market price is. For example, whatever price the asset is currently trading at. The market price of a financial asset is currently changing depending on the supply and demand for the specific asset you're looking at. When you place a market order for a currency pair, you cannot specify the price of your trade. For instance, when you place a market order, you will buy or sell the currency pair at whatever the current price is between when you press the buy and sell button and when the trade is executed. A market order is actually the simplest type of order. As long as there is enough liquidity in the market, Market orders are usually executed very quickly. With market orders, you do not have any control over the price at which your order is filled. Your market order will be filled at the current price market, which may be significantly worse than the price you can see when placing the order. If you want to trade at or near the current market price, then a market order may be the best option. So when should you use a market order? Market orders are useful in situations where getting your order filled is more important than getting a specific price. This means that you should only use market orders if you're willing to pay a potentially higher price due to slippage. So if you need to buy, sell right away, that's when a market order can be convenient. Thank you so much for watching us, guys.
Right, I bet you guys can see my screen clearly right now. All right, let's start today's advanced stochastics oscillator strategy. Okay, let's take a look. This is my profile. You guys can just be open and also type in the chat box. So we are looking at today's agenda. So we have an introduction of stochastics oscillator. We also have the best settings used for stochastics, and thirdly we have the secret strategies that institutions actually use and look at, and lastly we will be using stochastic oscillators to actually identify divergence. So what exactly is a stochastic oscillator? So some of the background of stochastic oscillator is that it's actually a popular momentum indicator developed in the late 1950s by George Lane. All right, we are also looking at it to be comparing the security's closing price relatively to its price range given or over a period of time. Sounds relatively close to moving average, but slightly different. All right, the oscillator does not follow the price and it does not follow the volume, but rather follows the speed or the momentum of the price. So that's one point that is very, very different from moving average. So we have a graph right here saying, seeing a stochastic indicator. You can see the bottom red color curvy line is actually how it would look like, how the stochastic indicator will look like to in comparison with the chart above, which is your regular trading chart, right? So we are looking at its formula stating that percentage K equals to current close minus lowest low divided by highest high minus lowest low times 100. All right. We are also looking at, so stochastics has two components. You will have percentage K and percentage D, which is shown in the bottom figure. So because the fast percentage K can be choppy, we will be smoothing it by applying an X-period moving average. All right, therefore finding ourselves with a slow percentage K, and then to get the signal line, we smooth the data further by applying another X-period moving average to slow percentage K, and now we have percentage D. So now we will be, in whole stochastics, we will be seeing two visible lines, which are the slow percentage K and the slow percentage D, which we see right here in the figure. So right in the figure, you can see the green wavy lines are your percentage D, K, and our dotted lines are actually our percentage D. So the best settings, or rather the default normal settings for stochastics used are normally 5,3,3. So you'll be seeing that these numbers will appear on the settings of the stochastics indicator when you are using any form of trading chart website, trading chart app. All right, so readings more than 80 will indicate the price is near its high and readings that are above 20. So readings that are smaller than 20 indicates that the prices are near the lows. So we have an upper bound and a lower bound kind of range thing. So we are looking at percentage 80 and 20. All right, the security that is overbought when percentage K moves above 80, and security is normally oversold when percentage K line moves below 20. I think it'll be more graphical once you get to see it. So we will look at it in a while. So some of the secret strategies that institutions use, or sometimes I do showcase in some of the webinars that we have had, where I use stochastics as the indicator, will actually include the uncertainties of their estimates and analyzing how portfolio performs during a volatile and uncertain market. So we are looking at something that is called the hidden support and the resistance. So backtrack a little bit, we are looking at basically on this slide, we are saying that we are looking at highs that are 80 and lows that are about 20. So we are looking at these two as resistance and support. However, if you are looking at how the price reacts and the momentum it carries in the stochastic indicator, you can see that on these four red color highlighted areas, or rather price and reactions, are the peaks of the reaction, right? So we can see at the peak of the reaction, we are seeing that actually at the peak, we are looking at 93.52, way above than our normal range that we're looking at 80. So in this case, if you are stopping yourself or letting go of your buy in and letting go the price where it hits 80, in the range, that would be ignoring hidden resistance that are actually like 93.52, or it would cut short your own profit that you could have possibly made, right? So in this case, we can see that the 1, 2, 3, 4 touch points on the peaks of the graph. All right, so on the 4 touch points, they are all in line and forming a new hidden resistance of 93.52. So we are also looking at the actual chart of dollar franc in H1 time frame. We can see that it's a very nice upward sloping trend. We can also see that these touch points, I would need my pen. You can see that these touch points could also relate to the chart right now. Right, so we are seeing that these few touch point that bounces off or bounces off the upward trend line are also bouncing off your invisible support, which is at 4.2675, which is way below our 20 mark that we are looking at before. So you can see that. Let me just clear the drawings. Okay, so we can see that in this case, we can mark this 4.2675 as a support in our resistance. And in this case, we can see that over here, we are looking at a potential push up and stochastics, which also means that there is a likelihood of support that has been bounced off on the stochastics indicator. Okay, so this is what we are looking at identifying divergence. Sorry. In this case, oops, sorry. So for those that are familiar with divergence, I think that this slide will be much easier for you guys. But however, those that are not familiar with it, you can look at, first of all, we have a upward looking trend with higher highs, higher lows, and downward moving trend with lower highs and lower lows. So we can also see in this case that stochastic, how can they identify in terms of divergence, right? So in the first few slides, you'll be seeing, we did mention that stochastic is actually looking through pricing momentum, right? So you can see that in this case, it did reach the peak beforehand. However, there was a slight increase in the price point. You can see that price actually closed off higher than before. However, in stochastics, they can capture a lower momentum, which is really odd, right? Since the price actually did close higher than before, which is also an indication of a divergence, which in this case we call it a bearish divergence. So in this case, after the bearish divergence, price indeed went all the way down to this level. So we can see that this also coincides with our hidden resistance level, which adds on to the divergence theory that we are looking at. And then we do see the support here. This is not in the slide, but you guys can also see it as well. So, and then price did bounce off the stochastic support that we're looking at, and also the pricing support that is also available over here, and did move all the way up. And then we are also capturing another bearish divergence at a higher price. So we can see that repeated pattern on the hidden resistance level of 94.98, and also a bearish divergence at the peak. In this case, you can see that indeed the bearish divergence carried over and price did slow down and dropped from the stochastic's hidden resistance level, coinciding with our bearish divergence. All right, so that's pretty much it for stochastics indicators. I know that I did go through a slightly quicker. If you guys have any questions, do let me know what kind of questions you have. You have some time to key in the questions before we go into a live analysis. Okay, I see that there are no questions. Then I will be sharing my screen right now to the chart. Okay, do let me know if you can see my screen. Oops, sorry. Oops, sorry. I'm losing the chat box. Okay, you guys can also key in your Q&A or in the chat box. If the chat box is not working, do use the Q&A, all right? So let's go through some of our regular pairs that we go through in webinars. I mean, we can go through any requested pairs as well. That would be great. So maybe let's just start off with dollar franc. Let's take a look at the weekly chart. Hopefully you'll be able to use stochastics in this case as well. So we are seeing a overlap, support and resistance overlap. We are also seeing a key resistance level over here. We'll take the first closing price as well. So it'll be 1.00153. We're currently looking at a dollar franc weekly chart. All right, so let's look at daily. We can see that for now, we are looking on terms of the daily, we are seeing that price is actually moving in between these two price. So we're looking at 0.93 and 1.001. So this is a not, in terms of the daily chart, is not super trending. We are looking at a sideways moving kind of trend. However, if you take a closer look in the H4, you can see that it's moving down slightly. We are looking at a potential channel, I believe. Let's try it out. Yep, we are looking at a downward moving channel. A bearish channel in this case. However, I would say that currently price is right smack kind of in the middle of the channel. A bit unsure. The market is a bit unsure of its goings, and we can see the price do react a fair bit on this level of resistance at this price of 0.94312. All right, this is something that for those that are carrying on with a dollar franc trade is a price point that you guys have to take note. It does seem like the price has difficulty bouncing all the way up to the resistance that we have at this level. However, I think we do have to take a closer look on where it's going. It looks like on the H4, it is still moving a sideways with a underlying bearish momentum. Let's look at another pair. Maybe Aussie dollar. Okay, let's start from the weekly chart. Initially was a downward moving, maybe it's a channel. Hold on. Yeah, it was a downward moving channel, but you can see the price has broke out of the channel for Aussie dollar. Let's look at 1-day chart. Very obvious, very nice channel. On the 1-day chart, you can see the very prominent upward rising trend. Not a very nice trend line, so we'll leave it. Try to see whether is there any highs or lows that we can take note of. As of now, not much. Let's look at H4. Okay, so we are seeing a upward moving channel. Okay, so it has just dropped out of the bullish channel that we have just drawn. Has a momentum to go down. However, I would say that there is some area of moving downwards. However, I am seeing a bounce off in this area of support. All right, so I wouldn't say it's a very big movement. I would say do keep in view for this as well. So we can see that some price did have a difficulty pushing higher than 0.68. All right, so weird today. Today's FX pair seems a little bit odd. Let's do silver then. Okay, for silver, very obvious levels here in terms of support. Looks like it's an upward momentum for now. Let's look at daily. So on the daily, there's a upward moving trend line. Not a channel, but upward moving. So we are also looking at a potential support turn resistance price point over here. Looking at H4. Let me just redraw the trend line. Instead of a trend line on H4, it looks like a channel. Yeah. So in my viewpoint, I would choose to remove this. I am seeing another level over here instead. Seeing a upward movement bounce off. And I would like to keep my stop loss slightly closer. Okay, let's use our Fibonacci retracement. So we are looking at a potential bounce off in this area. Let's use our projection. Drawn wrongly. Okay, so 127.2 coincide with our retracement. Let's take a look at our potential take profit. Looking just nice at the candlewick range. Take a look at stochastics. So you can see that in this case, let me show the setting. The blue is percentage K and D is percentage D. And then we are looking at possible support levels. Resistance level. All right, so there's a chance where we can see a bounce up from here. Sorry, the support can be slightly lower. Right, so we are seeing that there's a chance where price will drop slightly a bit more and then we will bounce all the way up to our take profit. However, you can see that I'm paying out the resistance to be 96.21 and support to be 56.1. All right, this is what I am looking at right now. Sorry. Okay, I am looking at this as well, Ichimoku cloud. The way the lagging and span. So you can see that there's a chance where price is actually above the cloud and we are indicating a upward movement momentum. All right, this is our silver for today. Is there any divergence per se? I would say no, there's no divergence, peak and drop. So it's very natural, very coinciding with the price and the movement. All right, this is silver for today. Let's hold on. Okay, I think it's fine now. Let's look at gold. Very obvious support here. Previously was on a downward movement. Possible support and resistance blockage. So it's a support to and resistance moment. Let's look at the daily. Nothing much to be captured here. Let's look at H4. Well, there is something that I'm seeing a slight upward moving momentum for gold in terms of channel. We can see that there is a support and resistance level here as well. You can see that price did double twin top. Price is already heading for the support, in this case in stochastics. All right, so there's a chance where price would bounce off from this overlap that we are looking at. So in this case, I'm actually personally also thinking that maybe we should go for this. And then this one, in this case, I would and could put according to Fibonacci projection for our stop loss. Our 78.6 Fibonacci projection is also nicely in line with our buy entry. You could keep your stop loss higher if you want to. However, I think it would be just nice as it's slightly below the channel and it will show a lot of indication if it really exceeds that level in price. Price is also holding above our cloud. Okay, this is my take. Let me just add in a retracement. 61.8 as well. This is what I'm looking for, gold. All right, as of now, do we have any questions? I guess not. Let's continue moving. Let's do Kiwi dollar. Like a very nice downtrend on a big time. Let's hide Ichimoku for a while. There's a relatively flat downtrend that we are seeing. Some form of resistance over here. Completes a V-shaped recovery. Let's look at H4. Depending on how you want to draw, I would like to draw closer to current prices. This is what we are looking at, an upward trend on H4. We are also seeing a indication of support here. So many touch points for this. I would say this could go both ways in terms of moving towards a resistance on the bigger time frame, like on the weekly, the price actually move past that and move towards the bigger resistance of the downward channel. However, the smaller time frame, we are looking at a short-term upward movement. there is a chance that this is a Nike tick reaction in terms of this that we are seeing. So let's take a look. Similarly, like a negative reaction, however, it has been played out back to here. So we are looking at this retracement with 38. Yeah, about there. Okay, so I would assume that if we ignore this historical resistance, let's just say, in this case on H4, it is here. It goes way back. Okay, then I will be looking at a probable upward movement. Sorry, my screen just went black. Hold on. Okay. We're looking at 100 at the bounce off point. One, 2, 7, 2 to be a stop loss. Let's take a look at Ichimoku cloud. Price holding up nicely above the Ichimoku cloud. Let's look at stochastics. We can see that stochastics indeed has reached the bottom. Looking at a very nice support line, very high chance of it bouncing all the way up. Okay, so we are looking at this bounce up and we are also identifying resistance over here. We can see that actually the real support for this resistance for Kiwi dollar is actually 12.88 instead of our 20. All right, this is what we are seeing for Kiwi dollar. Okay, let's move on to the next pair. Let's do unusual pairs like Aussie Kiwi. Let's do it on the weekly basis with an upcoming support here. Strong decline from the resistance here. Okay, let's look at daily. We can see a very, very strong down. So look at H4. I would say even though it is a downtrend, it is looking at a possibility of short-term recovery, short-term retracement. Let's take out stochastics first because I want to see is there any chance of divergence. No chance of divergence. We are still looking at a downward sloping even on the stochastics and a lot of close support levels. However, I do see that there's a chance for a small bounce up. However, I don't think it is worth the risk. Okay, anyone doing Kiwi Aussie Kiwi in the chat room? I guess in this case, we do not have any. So maybe let's just skip the pair. There's a franc yen. Interesting. We're looking at resistance and support level. Let's look at daily. You can see that actually price is moving up and down between these two levels. H4. Very obvious. The nearest resistance we are looking at is here. Sorry. 148.757. There's a chance that price is actually making a V-shaped recovery back up. It was before that a downward moving. There's a chance that the price would exhaust in a while. And there could be a way better entry. So let's just take a look. It is indeed true that price has reached its resistance. Is something to be aware of. All right. So there's a chance that the burst of the bounce from the support of 142.986 has been exhausted. So I would say that it would be better if we take a precaution on coming back for the testing and bounce up again. So my opinion is that if there's a chance that it drops back down, we could go in from here and taking profit at here. So we're looking at a 38.2% drop back, looking at a 50% stop loss. All right, so this is what we are looking at. Let's see whether our Ichimoku cloud can give us some more information. Yeah, it did seem like a downward moving for this one. So Ichimoku cloud is slightly lagging as well. So we do have to see whether the price exceeds the cloud of actually come back down under. All right, so this analysis is something to be observed. I would say that we have to wait for the price to react to this current stage first before we could decide on any direction. Okay, let's look at another pair. Dollar CAD it is. No particular channel or anything, but there is a upward moving slope. So daily slope seems to be slowing down a little bit. Previously, it looks like it has had a head and shoulder pattern kind of things. Yep, did react up to it a little bit and then picked up the momentum again. Looking at a potential support over here. Let's look at H4. There's a upward moving channel. There's a chance that it would have dropped down with the exhaustion of the stochastics as well. Yep, very high in resistance level already. I'm looking at a potential downward movement. Would still want to keep my price within, as in my take profit within the channel. So I would put it slightly above and on the dot of the support, the resist of the channel, and my stop loss just right below as the support as well. All right, let's take a look. One, 100% for take profit, and we're looking at 127.2 for stop loss. Let's take a look right now for entry. 100% for entry as well. Very nice triangles. Yep, that's about it for dollar CAD. Do we have any questions? Okay, I guess not. Let's look at yen. Upward moving as well, resistance here as well. Let's look at daily. Let's change this to red. H4. Interesting. I think on the H1 you'll see a slight triangle. So on H1, you'll be looking at this instead. Let's just do a small analysis on H1. Interesting, interesting. Looks like it's more of a downfall for the short term. And it is stopped a bounce up over here. CAD yen is pretty odd. Let's look at H4 instead. H4, you can clearly see that price has not reached its full potential in terms of resistance. Still trying to climb upwards. I'll say for the short time being, it will be pretty hard. However, if you're looking at a longer time period, you could see that there is a chance of bouncing up. However, it's not a very big entry. I would say the risk is not very worth it. Yeah. So in order to keep our take profit within the channel, we will be looking at more of the 1:1 in terms of stop loss and take profit, which I am not a very big fan of. Okay, we'll do one last one. All right. Let me think. Let's just do the XY. On the weekly chart. Upward moving as well, strong downturn after. Let's look at daily. So recently we're looking at a down drop. Let's look at H4. Yep, so looking at a downward fall for recent timings. Short-term downward, we can look at long-term upward, but let's do the downward first. I'm going in line with the trend line instead. Let's use our Fibonacci projection. 100% for the drop. Looking at 161.8 for a stop loss. %100% for the take profit as well. We are also looking at Ichimoku cloud in terms of price is below the clouds. We can also see that stochastics right now is at the resistance. We are highly likely heading for a drop. Very beautiful resistance for this case. This is what I am looking at for the XY. Seems to be an impeccable drop coming, I believe. Yep, I think that's all for today. Since you guys don't really have any questions, I will be seeing you guys next time. All right, goodbye.
And welcome to another of our informative videos. Today we will take a look at the New York Stock Exchange. Basically, a stock exchange is a regulated auction market where stocks, bonds and other securities are bought and sold. The New York Stock Exchange, which dates back to 1792, is located in New York City. The NYSE has the nickname of Big Board as it is the largest, oldest and the best known stock exchange in the world. The NYSE is owned by Intercontinental Exchange, an American holding company. It is the world's largest stock exchange by market capitalization of its listed companies at $30.1 trillion as of February 2018. The NYSE has over 2,400 companies, and its listing includes many of the big blue chip companies that have existed for decades, like Walmart, ExxonMobil, or General Electric. The New York Stock Exchange still uses a largest trading floor at Wall Street in Manhattan to conduct transactions. It is used to rely on an open outcry system in which brokers shouted prices at one another. Now more than half of its trades are conducted electronically. The NYSE is open for trading Monday through Friday from 9:30 a.m. to 4 p.m. Following the September 11 attacks in 2001, the NYSE was closed for 4 trading sessions and resumed on Monday, September 17. This is one of the rare times the NYSE was closed for more than one session and only the 3rd time since March 1933. On the first day, the NYSE suffered a 7.1% drop in value. After a week, it dropped by 14%. An estimated $1.4 trillion was lost within 5 days of trading. On October 29, 2012, the stock exchange was shut down for 2 days due to Hurricane Sandy. The last time the stock exchange was closed due to weather for a whole 2 days was in 1888. And in March 2020, the NYSE announced plans to temporarily move to all electronic trading on March 23, 2020 due to COVID-19 pandemic. The NYSE reopened on May 26, 2020. Thank you for watching.